Hi, we're gonna get started in a few ways to some more people come in. This session is gonna be about the home buying process and about mortgage. And if you signed up for the class, the link is in my bio. You will have got some handouts. So in a few, we're gonna get started. Yeah, I can get. Okay, let's get started. Um, Again, like I said, this is about the home buying process, and I'm gonna walk you through everything that's when you're looking to buy your first home, your second home, however, whichever home it is, we're gonna get started with this. Again, this is about the home buying process. I will touch on some things about the mortgage side, but I always suggest that you speak to your lender, that you, um, when you and your agent partner up, they will have someone that they associate with. I have a few business partners that's excellent. If you need any help here in Georgia, please reach out to me. My link is in my bio. Uh, so this course overview is understanding the step-by-step process of buying a home, identifying key financial readiness factors like your credit score, your debt to income ratio, etc. The difference between various mortgage loans, the conventional, the FHA, the VA, the USDA, and a jumbo loan, recognizing in common mortgage mistakes and how to avoid them. That's very important when you're trying to get your first house. First house, second house, those things are very important. Engage in discussion but we had, so the mortgage lender was supposed to be here. Unfortunately, since TikTok still not in your gallery, in your app stores and stuff like that, he couldn't get back on. So we're gonna discuss the home buying process. So first thing first, I was definitely tell you to reach out to your lender. I mean to your realtor. Your realtor could put you in touch with your with a lender that will be able to help you, because you will have to um, see where your credit is at. We don't want you to look at your credit first, because that will make your credit come down if you go and try. And I know a lot of people will say, "Oh, I checked it on Credit Karma." We appreciate that, but Credit Karma will not tell us a good point of where you're at. Credit Karma is more like when a store will pull your credit. That's what Credit Karma is more of. So I'll always say, if you want to know your true credit score, go to your bank. Your bank will definitely give you a true score for your credit. Um, so we try with the advice is not to pull your credit, because your credit is a big part of moving forward. Because when you pull your credit, it does drop down. That's why most lenders will do a soft pull in the beginning, so it will not affect your credit. And then they do that hard pull at the end of the um, as days before you close. So um, do not touch your credit. When you're ready to buy a house, do not touch your credit. Um, that's one of the things to get the pre-approval. Uh, we have to make sure your debt to ratio income is definitely um, where it needs to be. That again, you will be discussing that with your realtor and your lender. Communication is a big key in this process. Communicating with your realtor, communicate with your lender, but most of all, communicate with your realtor, because your realtor will know how to navigate a lot of these different aspects that you'll be going through. Because this is a journey. Something. Um, this is not something that will be. Um, oh, I got a realtor and that's it. We need to have keep a communication. Something will come up. Something always comes up in these transactions. It's like, oh, nothing come up. I made something comes up. They have near death experience. They have debt. They have oh, they have this medical expense. Something, because this is more of pressure, because you're trying to accomplish something. Every time you're trying to accomplish something, something comes up. So make sure we communicate a lot with our agent, so they can help us navigate these waters. Sometimes you may have to put things on hold, and that's okay, because life happens. But I'm not going to tell you to just drop the ball and like, oh, no. Life happens to us all. So this is a pressure kind of situation, but the reward is definitely beneficial. So as far as getting your pre-approved, your agent will discuss with you. So will the lender discuss with you your debt to ratio. If you may need something to help you with your, let's say you need your credit to be boosted. Most lenders um, will tell you need to fix certain things. And you could fix those things when you're going through the process. It does take 30 days. So let's say you need to pay off your car. Uh, the lender will let you know, pay your car off. That should increase your score. It's not, so let's just say you pay it off. What's today? Today is the 12th. So within 30 days, your credit will have a show an increase. So you will want to definitely discuss all that with your lender and your agent. That is very important when you talk about paying anything off, because they may have something on your credit that's really not affecting your credit, but you have went and disputed or you and paid it off. Now it's affecting your credit. So before you touch your credit, it's always best to talk to your realtor and your lender. And if you're not here in Georgia, um, you can reach out to me and I could definitely get you in the right direction to get your agent wherever you're located. But if you're here in Georgia, please um, book a consultation with me. The link is in my bio. I would definitely love to help you get through this journey because, again, this is a journey, a pressure journey. Um, so please do not touch nothing with your credit, and the lender will definitely let you know where you need to go because, again, they may have something on your credit that you don't need to take off at all. So once we get that, once we've established where your credit is at, because you have to remember your interest rate, it all goes what your credit is. Yes, the interest rate may be 7%, but that's the average. That's not everybody's not getting a 7% interest rate. Some people may get higher, some people may get lower. It is what it is. It's your credit. It's all due to you. So we will have to find out where you're at with your credit, and if you may need to take 2 to 3 months to get those things fixed, and that's okay. That's really okay. So we would make a plan. Most agents will make a plan with you and keep in contact with your agent at all times because, again, this is a communication. You have to communicate with this. Um, we will need to know your let's just say you're fine, you're ready to go. Your closing costs, you gonna want to know your closing costs, your down payment. Now they have in some areas, not all, like here in Georgia, they have some areas that is able you could get grant money, and that grant money is you're not paying that money back. So you don't so not to say bank on that grant money. But when you speak to your lender will have more knowledge on where those grants are. So definitely talk to your lender will have more knowledge on where those grants are. So definitely um, talk to your lender about grant money, not down payment assistance. Down payment assistance is something different. Down payment assistance, your lender about grant money, not down payment assistance. Down payment assistance is something different. Down payment assistance is something you're going to be paying back. Down payment assistance is so that money is two totally different things. Grant money is money you would not have to pay back. They may have certain terms for this grant money. Again, that's things. Grant money is money you would not have to pay back. They may have certain terms for this grant money. Again, that's when the communication comes with your lender and your agent. So we definitely have to make sure we get that communication together. I know a lot of people would think, oh, yeah, I got down payment assistance. No, that's two different things. Grant money and down payment assistance is two different things. So we will have to budget for our down payment. Um, and when we start saying down payment, um, people thinking, so we have, if you was here on the live last week, you will heard the term earnest money. Earnest money is money that you put forward, showing the lender that you are serious about purchasing a home. So that earnest money could go towards your down payment, or that earnest money could go towards your closing costs, whichever way it needs to be swayed. So let's just say your down payment is $10,000. This and it is all just figure numbers. It's not accurate numbers, but let's just say $10,000, and you put up $3,000. So now you just have to pay $7,000 for your down payment. Now, let's say you got a grant. That $3,000 that you put up for earnest money, it could go towards your closing costs. Now, definitely remember your closing costs will always, that's the fee that you're paying the lender to service your loan. And that's usually um, around 3.5%, but definitely talk to your lender about that again. Communication is key in this whole process. Your closing cost is the money that you're paying to your lender, and it's usually about 3.5%. It may be more, it may be less. That's all up to the lender, what their guidelines are. So what when you talk about, oh, when we ask you how much earnest money you want to put up, that money is not going to be lost. When you put up earnest money, you're going to have to, let's walk this back. Earnest money comes after you find a house. It's not before you find a house. You find a house, uh, your agent will help you narrow down how the house that you're looking for, because every house you like, when you're like a kid in a candy store when you start to go look for houses. Oh, this house is beautiful. I have a checklist that I usually have my buyers to check off, because you start looking at so many houses, all the houses look the same, and you don't remember how their house looked and in that nature. So a checklist could definitely help you remember what you're looking for in your house. Um, Nobody won't go see 200 houses, 20 houses. Is and if you move slow, sometimes it depends on your market. If you move slow, you could lose your house. I always, every time I walk into a house with my client, and it's just a certain way that they act when they know that's their house. That's their house. It's a The house basically speaks to you. So my suggestion is have a few houses speak to you, because if it's speaking to you, it's more than likely it's speaking to other people. So definitely let that house speak to you. Don't just jump into it. Oh, I want this house. Go find some more houses to let it speak to you, because more than likely you want it and so does someone else. And those games, you don't want to get your heart set on just one house, unless your market is really flooded with houses and it have more houses than buyers. So you could gamble that a little bit better. But I would definitely say don't just um, sit on one house. I'm not telling you go look at 20 houses. I know you don't want to go look at 20 houses, and I'm more than likely the agent don't want to go look at 20 houses. That's something we do daily. We go preview property to make sure our clients, a house may come on the market, and our clients, it might be the best interest for our clients. So we can reach out to our clients and let our clients know before it got a lot of traction. So that's something we definitely look. So I know, I'm gonna say me. I don't like to go look at 20 houses knowing we have narrowed your search down, um, where you want to be, and definitely look at the areas that you want to be in. That's another important key. Where do you want to be? Um, I definitely suggest, if you move into, let's just say you're moving here to Georgia. I don't, and if you've never been here to Georgia, I'm not gonna suggest that let's buy you a house. I will always suggest to rent you somewhere that you may want to be. Not to say that's where you're going to actually buy your house at, because you want to explore different places. Because you may be like, oh, because this is a long term process. This is an investment. This is a 30-year investment for most people. Some people could pay it off in 15, 10 years. That's great, but it's still an investment that we are definitely paying attention to. This is not something like you could just rent and move the leases up. That's not this what we're doing here. So when you move into a city that you really haven't explored or been to, you say you visited a few times. Oh, I want to stay here, and then you buy that house, and you realize they have better opportunities somewhere else because you never knew about it. I always would say rent your place, um, at least a 1 year lease, and roam the city, roam your area to figure out where you want to be because it is an investment. So when you find your house, when you find the area that you want to be in, definitely go around that house, those areas in the daytime, in the middle of the day, at nighttime. Because my thing is, roaches always come out at night. That's just me. But you want to know your area. You want to make sure you are in a good area. Um, if you're looking for certain areas for schools, definitely research the schooling that you're going to be in, because the schools definitely make an impact on your taxes that you're going to be paying in that area. Higher the taxes is usually better the schools. It's not always that way, but that does play a part in the school that you're in. Again, that's um, that's a local thing, and when you speak to a realtor, they will better assess you better with that. Uh, so once you set your sights on an area that you want to be in, then you can start researching all these different things. Oh, I want to walk to the park. I want to go shopping. So it's a lot of research you're gonna have to do. That's why I'm like, when you're going through the process itself and your credit needs to be fixed, it's going to be a process. It's not like you're going to just go out there and find your house and your credit still sucks. No, it's a whole process because, again, research the area. If you're looking for schools or you're looking for a certain community that you want to be in, you want to be closer to your church, to your job, whatever it is, you definitely want to research what you're doing. um, so once you find the area, you want to, so you got a broad scope when you first start. You want to narrow that scope down as much as possible. So like here in Georgia, they have a lot of different areas that people love to be in. Let's just say we're gonna go into Cobb County. Cobb County got a lot of different areas and have a lot of different things that goes on. They may have somebody 1 minute you want to go to Cobb County, the next minute you want to go to Forsyth County. Uh, we're gonna have to, my job is at that time is to narrow it down for you, help you narrow it down, ask you questions, what's most important to you. Because I don't care if you buy a brand new home, just got built, it's not going to be perfect. It's going to be something like, why did they have to do it this way? Because that's how they did it. No house is the perfect house. You're going to have to put your mark on any house that you buy. Is everything is subject to negotiation. Just remember that everything is a negotiation piece. So you want to definitely narrow your search down so you could get what you're looking for. And sometimes you can narrow it down, and what you're looking for is not on the market. So I want you to be aware of that as well, because you may have, you may say you want a house with 3 stories, a full finished basement, and a wing on the side. That house is not for sale at this time. So you may have to step away or get something else. You may have to compromise in your search. So just know a compromise may have to come into your search. It's so once we get that down, I will just let me back this up again. When we're looking at houses, what we're looking at for the houses is basically the making sure the area is safe. And this is for your personal house. You want to make sure the area is safe. You want to make sure that um, the roof is fine, and that's gonna come through an inspection. But just looking at it, you don't want to see something flying in the air while you're looking at the house. So um, you want to make sure the electrical panel seems to be safe, again, we're gonna have an inspector to come in to check all this out. But while we going searching for houses, we're not. Let's just say somebody have a hot pink room, and you have all boys. That should not stop you from buying that house because they got a hot pink room. Paint from Lowe's, Home Depot, whatever warehouse you want to go get it from. That's the easy fix because in that house may check all the boxes. So as far as the cosmetics, that's a negotiable tool as well for your realtor. So do not let that stop you from saying yes, I want that house. So when we're looking at houses, make sure you have a checklist. That checklist would definitely help serve you in getting what you're looking for. You might not check all the boxes on your list, but you should check majority of your boxes that you could live without. Because sometimes we may say, oh, we want a kitchen with this grand island, but you may get a kitchen with a little smaller island, and later on you may could take this house and work it to your next house. Because when you first jump into the water, you're not gonna know how to swim because we all sat at the edge of the pool and kicked our legs before we could learn how to swim. So this is what this process is. You have to, how they say, crawl before you walk. Yes, we nobody came out running. So when we going on our checklist, make sure this is what I want. This house had this, and if you have other people that's helping you make this decision, please talk to your realtor about that, because when your realtor is explaining these things, we want to make sure that all parties who is making this decision understand what is going on. We don't um, we don't want when the deal is going through, something blows up because somebody else didn't understand and you didn't know how to explain it to them. So all parties need to be in touch with your realtor. Your realtor needs to be in touch with those people. So again, communication is key in this whole process. So we definitely want to communicate if they have other people playing a part in this decision making. So when you go through the checklist, definitely, let's say you and your realtor has been looking for a house for maybe 2 weeks and you haven't seen anything. I would definitely say if your realtor don't suggest to you, I would definitely tell you to suggest to your realtor, let's sit down and regroup and let's see what's going on. And is it anything out there? You may have to find it in a different area. So the area that you may want at this time, what you're looking for may not be there. So take that into account as well. So you may have to regroup and talk to your realtor about that, about what you actually looking for. Because again, as a realtor, we have a network of realtors that we can reach out to because they have sometimes houses don't come on the market that you can see. Me being in with realtors, and I'm with Keller Williams, love the company. Um, we have a lot of agents. We have a lot of agents that I can reach out to and see if they have anything coming about that will fit my buyer's criteria. So again, communication is definitely key with your realtor. Definitely have a group meeting with your realtor if you get frustrated or something like that. Please don't shut down. Um, that's not going to help you nor your agent to help you with this process. So definitely go through your checklist, see what you've been looking at, and if it's something that's bothering you, make sure you let your agent know. This is something I tell my buyers when I'm in a house touring a house. I definitely tell my buyers keep their opinions to themselves while we're in the house, because people have cameras. People have cameras everywhere, and when you think it's something between you and your realtor and it's not, because people is watching you, definitely um, wait till you go outside. And I don't mean outside by the front door, because most people have Ring cameras these days, so they're gonna capture that conversation again. I would say definitely wait till you get to the car and have that discussion. Say you and your realtor, y'all went seen 5 houses and y'all went to Starbucks afterwards to discuss these houses. All went back to your realtor's office. Wherever y'all go, do not have that conversation inside that house, because more than likely they have something that people are listening to hear your conversation. And a lot of times those conversations is private, but we just aired it out because we're in the house and we wasn't aware that they had listening devices, cameras, or anything like that. So that's a big key when you're going through this process as far as looking for this house. Again, so let's go back to this checklist. Once we get everything on our checklist, um, say we looked at 10 houses and it's time to narrow those houses down. When you're after you went rode around those houses, like I say, in the daytime, the nighttime, and the evening time, the middle of the daytime, we still going through this whole process. So we're going through this process with the house at this time. Now we're still going through the process with the lender, because we still have to get our credit together if our credit was not together when we first start this process. And during this process, please do not use your credit cards. Please do not go apply for more credit, because you won't furnish your whole house. You don't have the house yet. You're not going to get the house when you go and apply for more credit. It's not, it's just, that's, that's a no. That's a big no. Um, do not go try to buy a new car or go on this fancy trip that you're going to use your credit. Do not do that. That is a definitely no. So you're going through, it's a lot. You're going to have, again, life going on with you. It's going to be, you got to make sure your credit stays together. You got to make sure you keep a budget of what you need, your down payment and your closing costs. Have that money set aside for you for those expense. Not to say you like I told you in the beginning, you may could get a grant that will keep money in your pocket. That is great. You may get the seller to pay some of your closing costs. That is great as well, but we are not banking on that. We want to make sure that our funds is available if none of those things come to fruition. And you want that house, you want to definitely get that, have your funds available when it's time to close on that house. So we definitely don't want to go and see that you had anything messing up your credit. So we're gonna now go and talk about uh, these different mortgage loans that's available. It's so we have the conventional loans, we have the FHA loans, they got jumbo loans, they got the VA loans, the USD loans, USDA loans. So let's talk about the FHA loan versus a conventional loan. So FHA loan is usually first time home buyers usually get them FHA loans. It's your credit score, the minimum your credit score has to be with a FHA loan is 580. Um, you could get a FHA loan with a 500 credit score. That's with a 10% down. So just remember, yes, you can get it, but you will have to pay 10% down. They have some lenders don't even deal with it. So we would definitely like for your credit score to be a 580 and above. We definitely prefer like a 640 because again, once that lender hit that hard pull, it's gonna drop your credit score, and it varies on how much it drops. So definitely keep that in mind. Um, so for a conventional loan, your credit score has to be a 620 and over. Conventional loan is you can still be a first time home buyer with this loan. It's just that conventional loan is more lax. It is not as strict um, requirements for conventional loan. Uh, so for down payment, is like 3.5% for down payment for an FHA loan with a 580 and over credit score. For down payment for conventional is 3 to 3 up into 20%. Now, if you want to put more than 20% down, that is great. That is great. Your mortgage will be um, you won't have to, pay. Let's just say you buying a $300,000 house and you want to put um, 25% down. That's great for you. I'm definitely happy. It's not a sarcasm or anything. It's just that um, it's it's not needed. But if you want to do it, definitely do it. Because if you want to pay that loan off faster, you can always. Most loans do not have a penalty. They have, but again, talk to your lender and talk to your agent about that. But a conventional loan down payment is between 3% to 20%. What FHA mortgage insurance. If you putting down, you is going to be required if you put um, less than 20% down when for FHA loan. You definitely have to 20% and more. You're not going to get a MIP. That's premium mortgage insurance. Um, Conventional loan mortgage insurance is required if it's less than 20% as well. Loan limits. So FHA loan limits, you'll definitely have to talk to your lender about what their limits at is for a FHA loan because FHA loan is lower than conventional. And again, you definitely have to talk to your lender again about the conventional loan limits. Every lender have different requirements and standards, so communication is key in this whole process again. So the property standards. So when you're getting an FHA loan, it's certain requirements that is needed for a FHA loan. One of the things is you have to have a refrigerator and a stove in that house with an FHA loan. It has to have. It must come with one. Conventional loan is not. You're not really you don't need those things. It's great to have those things. You can always negotiate those things to have in that house, but it's not something that is um, the conventional loan is saying this has to happen. So they have um, the FHA have stricter appraisals. We won't get to about appraisals, but it got strict appraisals requirements and again conditions requirement. You cannot for FHA loan. I know they have some people will say, "Oh, I won't get me a fixer upper." Yeah, a lot of people say they want a fixer upper until they see that fixer up and it's like, "Oh, I could do this," and then when life starts to happen, that never get done. I will give you an example. People want an unfinished basement. We, oh, I'm gonna make this as what they like to say, a man cave. Yes, that is great. I'm gonna do this, me and my buddies. You and your buddies never do it. Y'all go out somewhere else and go look at the game or do whatever. And 10 years later, that basement still look the same. Now it just have a lot of storage boxes that y'all don't even come down there and use. And now y'all ready to sell the house, and we looking like, well, the next owner could fix it up. So people always say they want a fixer upper until it's time to fix it up. And for FHA loan, you cannot get a fixer upper with an FHA loan. The house have to be moved in, um, ready to go. Nothing really needs to be done. No plumbing needs to be done. The roof don't need to be done. The electrical don't need to be done. That's what FHA is definitely looking for, those kind of things that don't need to be done. They want you to be able to go into that house and live in that house. And when you're ready to make changes, you can make changes as you go. So that's something for if you get a FHA loan, they have certain requirements that you have to adhere by. And it is made to protect you as the buyer. um, I know people gonna be like, "Oh, this by the FHA loan, they got too many requirements," but it's protecting you and your investment. That's what a FHA loan is made to do for your investment. You gotta remember, these people not paying your mortgage, and these people is not staying in your house and paying for everything that needs to happen. So just remember that a FHA loan is a good loan. It all depends on what your requirements are and what your needs are. So yes, someone else may have got something else, but people do not tell you the details. The details, the devil's in the details for everybody. Everybody make it seem like something else, and it's not always what it seems to be. They leaving out a good portion of what they're telling you on what they received, or this is how this thing went, when they're not telling you the true story. So do not believe what they say. A FHA loan is not a good loan. It is a good loan. So the standards with conventional loan is more flexible. Again, it's flexible. You could definitely use that FHA loan or that conventional loan and get you a fixer upper. And if you have a crew ready to go when you purchase that house, that is a great thing. That's something you want. And if you don't have a crew, ask your agent. Your agent should have will have a lot of these people um, on their list, their vendors list. They definitely will have uh, they know contractors, they know electricians, they will know plumbers, they will know roofers. Uh, so definitely, again, communicate this with your agent to make sure that you get that conventional loan, and you have someone to come and fix that house up if you want to fix it upper. So a conventional loan will be great for that. FHA loan would not, you will not be able to get that with a FHA loan or a VA loan. I know we haven't got to the VA loan yet, but a fixer upper would not apply, would not go for a VA loan and an FHA loan. Just remember that. So with a FHA loan, it's made for you as the buyer to live in that house. A FHA loan is not made for you to purchase that house and rent that house out. That is not going to work with an FHA loan. It's you definitely have to, they're going to have to be your primary home. So remember that for the FHA loan. For a conventional loan, you could get that. That could be your primary. That could be a secondary. That could be an investment. So that's one of the big difference with a conventional and an FHA loan. FHA loan, you definitely living in that house. Conventional, that could be your second house on the beach in Belize somewhere else. But that's what a conventional loan does. You go buy your duplex and invest with a conventional loan. So just know these are all when you purchase in a house, it's an investment. But for FHA loan, this is more for a buyer. It's usually first time home buyers get FHA loan. I'm not saying somebody else don't get a FHA loan, but that's where I usually see FHA loans with first time home buyers. And a first time home buyer, let's just say you bought a house um, back in 2015 and you sold that house back in 2018. Now it's 2025. You won't go get you another house. You're now considered as a first time home buyer. So don't think because you bought a house before you're not a home first time home buyer. You still a first time home buyer in the realm of it because it's been more than enough time. That's like 7 years. So you have more than enough time to say you're a first time home buyer. Um, so that's what the conventional versus FHA. So we're gonna do now the jumbo loans. A jumbo loan, the credit score they 700 and over, but they prefer it to be 720 and over. And jumbo loans is more when you're looking to purchase a house that's over a certain threshold, and it differs from every area. And I believe our jumbo loans begin at 750. I'm not quite sure. I don't remember, but I will definitely have to look that up with my talk to my lender partners to find out what a jumbo, how much you have to how much that jumbo loan will have to be, the threshold of how much the house is. Is people usually use jumbo loans when they're purchasing um 800, 900, $1 million, $2 million houses. That's when a jumbo loan will come into place. Um, Again, the conventional loan is definitely at a six. It's a 620 and above for the credit score. The down payment for the jumbo loan is between 10 to 20%. Uh, and of course, again, the conventional loan it could be as low as 3%. So it's like when you stepping into that jumbo loan, you definitely will be required to have more cash on hand because again, that's a larger purchase. And if you trying to go into let's just say $1.5 million house, we would they definitely gonna need for you to put up some money because the loan is much riskier than a conventional loan. Um, so that's one of the things that you definitely have to remember, that the jumbo loan is is a higher risk, and that's why they want your credit score to be a 720 and above. Um, for the mortgage insurance, it's no PMI, but a higher down payment is required for jumbo loan. So, like I said previously about the FHA, if you pay less than 20% for that house, you got to have a mortgage insurance, and that's also with conventional loan. If you're paying less than 20% mortgage insurance, definitely have to. The lender, the mortgage company has to be insured that if anything happened to this house or you default on this loan, they are insured on this loan here, this house. So the loan limits for a jumbo loan, it's uh, that's something you have to talk to the lender. It will be exceeds confirming loans limits. So again, if you out there trying to buy, let's say, a $5 million house, you more than likely will be getting a jumbo loan. If you're trying to buy a $5 million house, you're definitely not getting a conventional loan. I'm just gonna say that. So let's say the jumbo loan starts at around 800,000. That's where you will stop the conventional loan. The conventional loan will be you cannot get a loan no more than $799,000. So just remember that. Whatever when you talk to your lender, find out how much it is for how much it has to be for where the jumbo loan starts at, and wherever the jumbo loan starts, you know where the conventional loan stops at. Um, as far as the interest rate on a jumbo loan is higher due to higher risk. Again, If I'm purchasing a $5 million house, of course I will have a higher risk because, like I was saying, as far as the 7%, it's not everybody's interest rate. If I'm applying for a jumbo loan, I will be getting I may get something like a 10% interest rate. Again, it's a higher risk loan, so you will be paying more money. And at that price, you should know that you're going to be paying more money for what you're looking to purchase. So definitely keep that in mind when you're ready to go with that jumbo loan. Definitely let me know. I have a few business partners, my lenders that can help you with those loans. Um, Even conventional FHA, all these loans I'm talking about, I do have business partners, lenders to help with any of these loans. So if you have any questions, please let me know about those these loans, and I could definitely direct you to my lenders to help you out. The interest rate for a conventional loan, it will be, let's say your credit is 620. You may be qualified for a 6.5 interest rate. I'm not sure exactly because your interest rate definitely goes on about your credit, but it also have some other things that plays a part, like your debt to income ratio and things like that. So that definitely plays a part in your about your interest rate, but it's definitely lower than a jumbo loan because again, jumbo loan is a higher risk um, loan. So the debt to income is they typically like for a jumbo loan to be less than or equal to 43%. So they don't want you to have too much debt that they look at it and like, you're not gonna be able to pay this $5 million house off. So we need you to come down on debt that you are carrying, so we could ensure that you could get this loan. So less than 43% is definitely not much that you're asking. But if you live a high lifestyle and you carry everything credit, it's gonna be kind of more. It's They will feel it's much riskier to loan you this money. So again, communicate that with your lender and your agent. Those things are very important when you definitely looking to get a jumbo loan. Conventional loan debt to income ratio is a little bit more flexible, and that's again you're talking to your lender and you're talking to your agent about your debt to income ratio because um, good lenders will definitely tell you how to get it to where you need it to go so you could purchase that house and get that loan. They will definitely help you move the needle forward. And it's just your job to listen to them. They could tell you what you may need to do. However, it's your job to get the job done. Um, It's like leading a horse to water. You can't make them drink. So we're gonna go to FHA loan versus a VA loan. Um, Again, FHA loan, you have to have a 580 and above, um, or you could have 500 with a 10% down. A VA loan, um, they have no set minimums, but the lender prefer it to be 620 and above. So again, VA really don't have a credit requirements. The lenders set the credit requirements for the VA loan. So and most lenders prefer it to be over 620. The down payment for FHA loan is 3.5%, um, with 580 and above. Down payment for a VA loan is no down payment with a VA. That's the great thing. Um, but the eligibility is only for the military members, their and some of their spouses. So that's, you know, some of the population can't get that good no down payment with the VA. And the eligibility for a FHA loan is open to all borrowers. So anybody can apply for that FHA loan. Um, so one of the things that um, the VA and the FHA loan have in common is the requirements, the strict requirements that they asking for a house to be in when that borrower is trying to purchase a house. They both have to have strict requirements. Again, they definitely like to have for you to have at least a refrigerator and a stove in that house when you purchase in that house. They want that house to be ready to go for that person to move in and be ready to live in that house. They don't want that person to be like, oh, I don't have the money after I just paid down payment, closing costs. I don't have the money to go buy me a refrigerator. I don't have the money to go buy me a stove. No, FHA and VA loans um, require to have certain things in that house for it to approve, for it to go forward to purchase that house. Uh, the occupancy for VA and FHA loan, they're both the same. You have to live in those houses. That's a definite requirement for both of them. You have to live in that house when you purchase that house with those loans. Um, Definitely, if you have any more questions about that VA or FHA loan, definitely reach out to, again, communication goes a long way with your realtor and your lender. Definitely ask the questions that you may need. I do have some questions that I sent out to my buyers because a lot of times people do not know the questions that they need to ask a lender. So I usually send out some questions to my buyers so they could look over and see which questions that they feel is most important that they need to ask their lender. This is another suggestion. Chat GPT. You could always ask Chat GPT, ask them with some good questions to ask my lender. And, you know, if you know how to work Chat GPT, you know how to, it will definitely let you know what you need to be talking to your lender about. So that's a FHA loan versus a VA loan. So now we're going to do the VA loan versus the conventional loan. Um, Again, we know the credit score for a conventional loan has to be a 620 and above, and they have no set required credit for a VA, but the lender prefer it to be a 620 and above. No down payment for a VA loan, and a down payment for a conventional loan is between 3 to 20%. Um, they have no PMI with a VA loan, but they will have a PMI, a mortgage insurance, with a conventional loan if it's less than 20%. Again, the eligibility for a VA loan, if you didn't serve in our military, and I thank y'all for your service. Um, if that's what VA loan is, military service required. Uh, Conventional loan is open to all borrowers. That's why you could use a conventional loan to buy your secondary house and buy investment. VA, you cannot do that. You have to live in that house with a VA loan. VA loans, it have no set loan limits requirement, but you definitely will have to discuss that with your lender. Again, you're going to hear me a lot talk about communication, because communication and asking questions. And if anybody get frustrated with you as far as the questions, sometimes it's like they don't know, um, or Oh, you might be annoying. No, I'm just kidding. But no, but definitely ask these questions because this is very important because this is your money and you need to know where your money is going. So definitely ask the questions of, again, the VA have no set limits. Um, the conventional does have a limit. Talk with your lender about that limit. Like we discussed with the jumbo loan. Say the jumbo loans is 800, so that means the conventional loan limit would be at 799,000, 100,000. So definitely discuss those things with your lender. So as far as the fees go, um, a VA has fees. It have a funding fee, um, and um, that's a required. That can be it can so that fee can be financed. So you may not have to even bring that to the closing table. Again, discuss that with your lender. That the great thing is it can be financed. So, but for conventional loan, it's no fees. So that's a good thing as far as the VA and a that's the difference between a VA and a conventional loan. So now we will touch on the about fixed rate mortgages in versus adjustable rate mortgage. The interest rate remains the same with the fixed rate mortgage. So if you apply for a loan at a fixed rate and you have a 6%, it's going to be 6% throughout the your payment. If you got a 30-year loan, it's gonna be that 6% for 30 years, unless you go refinance. Now that's when it would change. When that's when your it will change some when you refinance. But for the adjustable rate, the interest rate will fluctuate. An initial fixed rate period, let's say it's for 5 years, it's the same rate. 7 years, 10 years, it may be the same rate, but it will fluctuate throughout that time. Um, what a fixed rate mortgage, it's a predictable monthly payment. If you paying 2,300 this month, you're gonna be paying 2,300 next month and throughout the rest of the loan. Again, unless you refinance and you got a lower interest rate. That so let me touch on this refinance. So when you refinance your house, um, they will definitely tell you, let's refinance and put you in another 30-year mortgage. That's not going to do you any good because so let's just say you paid 10 years off. So you got 20 years left. You want to refinance your house to get a lower mortgage. Do not go to that 30 year because you're going to be paying them more money for an extra 10 years. So definitely discuss that with your lender when you considering to, because they have a 15-year refinance and they have ways you could pay off your um, mortgage sooner. You will pay more to your principal, not to the interest, and you will have to. They will have something on your statement saying, "I want." Let's say you want to add $200 more to your mortgage. You're gonna check off that this goes towards principal. Bottom line, principal, not to just the mortgage, because in the first few years, you're paying mostly the interest rate off. You haven't even touched your mortgage. So if you could pay an extra $200 every other month or so, make it go towards your principal. So you will start to see a difference in your the payments that you have to pay. So I just want to touch on that as far as the refinance because people was getting to a refinance and they will have paid 10 years off their house and then want to refinance. And yes, it looks better when you do a refinance. You got to do 30 years, but you're paying an extra 10 years and you only had 20 years left. So I want you to be smart with your money because this is an investment. I don't care if this is your primary home, you are investing in you, and this is how you build generational wealth here in America. You don't want to just throw your money away. That's something that's not what we're trying to do. We are trying to grow our network because we could always use this house to um, buy another house. You could take the equity out this house to furnish, to get you another house, and keep it going like that. So, um, sorry, I don't know what this did, but yeah. So that's what you're definitely doing with this. You definitely when you this is an investment for you, and you could take equity out and purchase your next home and keep it going. And your next your next house, say it's an investment. Your investment, you want to rent some property out. You having that rent set for to pay that off, but you're already paying off your mortgage anyway. So you definitely gonna want some. Um, so you definitely want to make sure that you don't try to refinance for 30 years. You want to cut that down. But for as the adjustable rate is the lower interest rate compared to a fixed mortgage. Definitely, that's another discussion. You'll be talking to um, your lender with about the interest rate, because your interest rate definitely fluctuate. When, let's just say, you had a few years ago you had a adjustable rate mortgage and the interest rate was at 3%. If you didn't get it fixed at that time, you kept the adjustable rate. Now your interest rate is at 7% or higher. It all depends. So again, discuss that with your lender. They will definitely have that information for you. Um, is they've so a fixed rate mortgage is best for long term stability. So again, you know what you're paying each month. You know what you have to pay for uh, every month. This is, you know how to plan. You know how to budget. That's another key thing you will definitely need to learn how to do is budget your money. Budgeting and come up with a plan each month with this with your financing. That's something you will definitely have to do once when you apply for a loan. You definitely gonna be they're gonna look how you budget your money. If you are doing well with your money and budgeting your money and you paying your bills, so just get into the habit of budgeting your money. Um, with the adjustable rate, monthly payments can increase or decrease after the fixed period. So just know that it could go up. It it may be $2,300 this month. It may be $2,000 next month. So adjustable rate it works for some people, and it's the adjustable rate is best for short term ownership or buyers expecting interest rates to drop. So that's more of a short term. Uh, let's just again let's take it as a for investment. So we're not looking to be purchasing an investment property and still be paying on it for 30 years like your regular home. Because one of the things that our goal is when we buy an investment property is to pay it off so you can start enjoying that wealth. You may have somebody in a duplex and you got two houses that's paying you $2,000 each month, so you got $4,000 coming in. You do not want to have that keep on to your mortgage for 30 years, like your main home. You want to start making profit so you could live the life that you want to live. So that's the good thing about adjustable rate mortgage. And um, fixed rate mortgage is ideal for who plan to stay in a home for many years. So the adjustable rate will be more ideally, not gonna say ideally, is all up to you and where you're at in your financing as far as the um, what kind of mortgage you're looking to get. So that's um, that's what we that's that's with the mortgage. Again, communication with your lender and your agent is definitely key, especially in that aspect. That is key to know how your money going to be working, because this is an investment for you. You're living in your investment, or you making money in for your investment. You definitely for you. You're living in your investment, or you making money in for your investment. You definitely want to know those things. So we're going to touch bases on the common mortgage mistakes to avoid. Please, let's avoid these things so we could become homeowners in 2025, 2026, and going forward. We want to become smart homeowners in this atmosphere. So again, we're not checking credit before we apply for a mortgage. We are just not going to do that. Um, because that does hit your credit score and drop it. Let's say you are right on the brink of that. Let's just say we are looking for a conventional loan and you have to be 620 and above. You are right there at 621 and you check your credit score now. You're like, oh, I'm at 621. And by the time that lender hit it, it may be saying you are at 605. So you definitely don't want to check your credit before applying. You may want to check it 6 months ahead of time so you can know where you need to be at. And by the time you talk to your lender, you could be where you need to be at that 620. When a lender pull your credit, you definitely ask them, are you going to do a soft pull or are you doing a hard pull? Most lenders, they have some lenders will say, I have to do a hard pull. That's the risk you're going to be taking on that hard pull. I know I work with lenders that will definitely do a soft pull. So it all depends on that lender, on how their business is operating. So we do not want to check our credit before applying. Let's just let the lender check our credit so we will know what we need to do. And if that lender say, well, your credit score is this and we needed this, you need to ask that lender, well, what is the steps I need to take to get it to that point? And when that lender start educating you on that, that lender is usually in your corner to make this process work. Now they have some people out there who do not indulge. So that's when you start talking to your agent, say, I need a different lender if you're not comfortable. If you're not comfortable with that lender, let your agent know so you can go to a different lender. You're not bound by one lender. They have some people, I don't suggest this, but they do have some people right before closing change lenders. I don't suggest that at all by a stretch of the imagination. But you're not bound to that one lender. If you're not comfortable with that lender and you just don't feel like something is right, definitely discuss this with your agent. That because we are working to help you make this process as smoothly as possible. That's the goal. My goal is to look out for my client and their better interest, not my interest, your interest. So that's what you're looking for when you're talking to a lender and when you're talking to agents. You want them, you want them to, you want to have them work for your better interest, because that's the bottom line. It's not about the agent, it's not about the lender, it's about you and your financing. So please do not check your credit before applying. Do not make any large purchases before closing. Do not go and rent, put some money down because you're about to have this big house party before you went to the closing table. Anything can happen between those, and you'll be surprised on how much happened between you, after you get our due diligence and going to the closing table. A lot of stuff works. It's life still be lifing. So do not make a big purchase. Don't make that big purchase, until 2 days after you close that house. You want to be out. You want to make sure you have that house. That will definitely stop you from moving forward if you make a big purchase before closing table. Because again, your lender is pulling your credit a few days before you close. And here in Georgia, it's usually 3 days before you close. They will send it out to you, that letter saying we're good to go, and sending you your paperwork. So you definitely do not want to make a big purchase at all. Because I know we get excited about, oh, I need to furnish my house, I need to do this. Yep, you definitely do. But you're going to have to wait until that house closes. So do not go and try to make any kind of big purchases. Another thing to avoid, please try to stay on that job during this process. They have so many people will change their job because somebody pissed them off. Um, Sometimes, you may want to stay humble. You may want to stay humble um, when you're going through this process. Don't let people know what you're going through in this process, because they have some people who are just jealous. Jealousy is very contagious. They see you're moving forward and they were like, how are you able to get in? Why are you able to do this? Not their damn business. However, they will make you lose your job and or change jobs. Now, I'm not saying, oh, you got a promotion and you are no longer in this department. No, if you quit this company and you go to the next, to a different company, now you have changed jobs, and now that's a problem for the lender, because stability is what the lender is looking for. Look, they want to make sure you're stable. Now, if you won't give them your 2 weeks notice the day before you about to close, that is fine. That is definitely fine. You got your house, and I don't suggest that, but you don't want people to know what you're going through for them to mess up what you have been working so hard and going through this tedious process with. You don't want them that to stop you. So please do not change jobs during this whole process. Um, if it get that bad, see if you can take a leave of absence. But that will definitely hurt you if you're trying to get a house, because stability is what the lenders are looking for. Um, Please make sure, again, you budget for your closing costs and property tax. And your property tax, the lender usually have that in your statement on how much property taxes that you'll be paying. So definitely, if you don't get that information, definitely communicate that with your lender and your agent. They should have that information, especially your lender. Your lender should have that information about your property taxes. That's definitely important because the government will put a lien on that house real fast. And again, that usually go inside your mortgage because the mortgage company always want to be the first lien on your house. They don't, because the government trumps the property taxes and any other thing that the lender may have. The government will come in and seize your property, and you still have to pay off that mortgage, but you have to pay the lender as well. So definitely understand that property taxes is very important to be paying, and it's usually inside of your mortgage. Your lender usually take it, have you pay that within your mortgage. So just remember that. That's some things we definitely need to avoid while we going through this process. So let's just say congratulations, we got the house. So now what we do with the house, you have to remember. So wait, let's back this up because we have to go. Let's go do due diligence. You found your house, and your house is. We have an inspector to come out. Do not waive that. Do not waive that. You. Oh no, I don't need an inspector. This and this. Oh, my dad. No, your dad, uncle, cousin, whoever is a what roofer, whatever they are. You definitely want to invest that money into get an inspector because let's just say you bought that house and you waiting on your dad to come and fix the house and they have a hard rain and all this while you have something going on in that attic or your roof is not right and before your dad could come out your house just got flooded. So we do not want to waive our inspection. That's a very important key that we need to have going through this process. The inspection, that's definitely a must. And your appraisal. You getting a loan, you gonna get an appraisal. We're not waiving that either. Because you do not want to have to pay for a $350,000 house and it's really only worth $295. So you are now underwater. You want to be it's best to go into a house with equity. And let's say the house is worth 359,000 and you bought the house at 288. So now you coming in with equity in your house. That's what you want to go in when you get in a house. You do not want to go into a house and you're underwater and you're trying to get it up to the price that you paid for. And that's what happened to a lot of people um in 2020 and 2021. They went into a house and a lot of them overpaid in that market. Then they have some who paid a good price and their houses skyrocket. So that's a gamble, but you don't want to gamble like that. It's not a good gamble, and we're not in that market anymore. So well, here in Georgia, we are not in that market. So I would definitely say make sure you get that appraisal and you get that inspection. They're gonna look at your roof, they're gonna look at the plumbing. They go into crawl spaces. They may suggest, say you they see some water damage, they may suggest that you need to get someone out who do mold and mildew in your house to test for that. So you definitely want to go through the inspection process. It's definitely important to have that done in your house while you are before you purchase that house, because you don't want to walk into a house and it got mold and mildew in that house. That's toxic and that could kill. So we don't want that. We want to buy. We want to be smart investors when we purchase in these homes. We're not waiving our inspection. We're not waiving the appraisal. So those two things is very important in this process. Again, you're gonna be happy to be out there looking at these houses. So follow that up and be smart with it. Be excited, all you. I'm not gonna take your joy. Be happy. You on a journey to get part of the American dream. Congratulations on that. I'm very happy and very proud of you on this journey. But need to know, you definitely need to get that inspection and that appraisal in this journey. So let's say we purchased the house, everything is good. So we have to make sure we have um, know how to maintain this house, because maintenance is definitely key, because we do have certain things that need to be done in our house while we are living in this house. They have seasonal things that need to be done. If you register for this class, you will have received a handout that for the spring, the winter, the summer. For the spring, the winter, the summer, different maintenance that need to be done on your house. I did put on my page that they have monthly maintenance that's needed on your house. So once we get the house, we need to know how to maintain this house. It's just not going to just, because you are now your own landlord. Again, if you need, let's say you need a plumber, reach out to your agent. They they usually have someone who will with the plumbing know some a plumber that they could suggest to you. They you may want a landscaper. They usually have someone that they could suggest to you that could landscape your house. You may find the landscaper in the neighborhood. Reach out to your agent, because your agent usually have those kind of connections. So that will definitely help you maintain your house and keep your investment what it needs. You want your equity, and you want build you you want to make money off your house. You don't want your that to start to come down. It is no need to purchase something that's gonna cost over 300,000. I don't care, over 100,000, and lose money on it. That's not what we're looking for. We're looking to build from the first house so we could go to the next house and everything like that. So let's just say what season we still in winter, but we're going to the spring. Hopefully we're going into the spring. Because the weather's changing. But let's so we for the spring semester for the spring season, we checking a roof for missing shingles or any exterior damage, because again, because of where you live at in the country, well, we all got snow this year. Well, majority of us got snow. I know we got snow here in Georgia and New Orleans. They got snow, and these places, well, New Orleans, they usually don't get snow. So even in Florida, got snow this year. So you have to remember, your roof is something that's get hit by all kind of weather. It could the sun could be hot. You know, some people saying the sun is getting hotter. It's sometimes it feel like it, but your roof is taking a beating in all kind of weather. Even if it's the rain is beating up on it, it could have hail. You want to make sure that these things are in place. This is a seasonal thing that you will need to do. Uh, you want to check your gutters and downspouts of any debris that may be left from fall and winter. If you have trees around your house, you may get some leaves inside. You may get some leaves in your gutters and stuff. You won't want to make sure and check that, so you could so that water could, you don't want that water to sit there and start seeping into your house. So definitely want to uh check your gutters and downspouts to make sure that water is flowing nicely. You want to check your pump to make sure it's working effectively. So you want to make sure things is in rotation and maintenance. Everything has a maintenance to it. You want to make sure these things is always moving forward. Have your HVAC system inspected by a professional. Like right now, they have sales going on saying they will check you and inspect your HVAC system for some people saying $49. Some people I have seen here on TikTok for $29. So you definitely want to get that check to make sure your stuff is staying in because if you go your air go out and it's in the middle of the summer, whew, and then you got to pay for one that costs that's a cost that you wasn't trying to occur. So definitely keep that maintenance and that working. Of course, that's like going to the doctor to get your regular checkup. That's your house need that as well, but your house need it in seasons. You may need it in seasons as well. So I'm not a doctor, but just let you know, your health is your wealth. Check your water heater for leaks, corrosion. Definitely do that. You don't want to, especially coming out the winter time, you definitely want to make sure that your water heater is still operating that it needs to, because things could have happened, pipes could have got frozen, all kind of things could go on, but you want to make sure your water heater is working properly. Check your electrical outlet for potential fire hazards such as fray wires or loose fitting plugs. So, of course, I'm not saying go into your walls to see if the wires is fine. That's that's not what I'm saying. I'm just saying if you see your outlet is just not it's not on the wall like it's supposed to be and wires are hanging out, yeah, we need to it may be an easy fix. You may just need to tighten that screw back, or you may need to call your electrician. It will be up, you will be able to know best. This will be your house, so you could tell what you may need to do. What you may could just go to a Lowe's or Home Depot, because sometimes those people in there are retired plumbers, retired electricians. So, and then some of them just know that particular department very well. So I would definitely say, use your different resources that you may have to know if you need to contact an electrician or you could fix this yourself. Um, I am not a DIY kind of person. So just to say that, test smoke and carbon monoxide detectors to make sure that they are in good working condition. Now, we know we hear those smoke detectors all the time. Beep, and it's just like something, a white noise in the background. Please don't do that. That's very important. Very, very important. I know we get so relaxed about it. It's like, oh, I'm gonna change it. I'm gonna change it. I have did that, but that noise starts to get on my nerves. It really irritates me. So, but that's very important to have and make sure that your smoke detector and your carbon monoxide is definitely working properly. Definitely change those batteries. I would definitely say do it each season, or you could do it at the beginning of the year and at the end in the middle of the year. So those things is very important for your investment to continue. Remove dead trees, shrubs, and make sure they are trimmed away from utility lines. You definitely don't want that tree that's close to your house hitting that utility line, and that tree is touching your house and your house catch on fire, something like that. You want to make sure everything is maintained in your around your house. You don't want to this is a big investment that we are going with when we purchase a house. The maintenance of your house is definitely important to keep up. So that's something we definitely want to make sure we stay aware of and just keep that in front of mind because this is an investment. Um, you will have um, different repairs that you may want to do when you bought the house, you're like, oh, I want to change this kitchen. That's great. But maintain is definitely key. Definitely set up. I don't like to use emergency fund. I would like to say a peace of mind fund. So I would definitely say have a separate savings account with your peace of mind fund. Put some money in there. So if, let's say, your water heater do go out, you got to buy your water heater and you like, damn, I wanted to go to this vacation, or I wanted to go to this concert, I wanted to just go have girls' night or males' night out, whatever it may be that you did not want to take $1,200, $1,400 to go buy a water heater and get somebody to put it in. So definitely make sure you have a peace of mind fund and don't touch it. It is That's definitely something very important to keep that house running. I definitely suggest that you get a home warranty when you purchase your house as well. That's something I definitely I get that for my buyers to keep a peace of mind. Um, let's just say the HVAC go out and you don't have that kind of money to replace the HVAC. You got a home warranty. Your deductible may be 250 or less. Either way, you're not paying $8,000 to get a whole new HVAC. It's not coming out of your pocket. You got a home warranty. It's like having insurance on your car. You drove, is you not making you haven't had an accident, and as soon as you don't have that insurance, what happened? Like the warranty may go off on your car. I know y'all get the calls from the get your car warranty and everything, but let's say when you after you finish paying that car off, something breaks on that damn car. It just happens that way. It's crazy, but it happens. So definitely get your home warranty that gonna cover your appliances in your house, your refrigerator, your stove. Let's say you have a double oven, your HVAC, your water heater. You want to make sure those things is definitely in good maintenance, and you want to have warranties on those to cover, so you don't have to come out of pocket. It may be Christmas time and you ready to enjoy yourself for Christmas, and your water heater go out. That is $1,400 you was not looking to spend. But if you had a home warranty, you will be covered. Instead of paying $1,400, you may have to pay $100. That's a better trade-off than have to pay all that money. So you want to keep you a peace of mind fund. And I know sometimes that fund might be looking like, oh, I could. No, don't touch that. Do not touch that peace of mind fund. It's there for a reason. Because when you start touching that peace of mind fund, is you gonna keep touching it. Like, oh, I'm gonna put it back, and that money you never put that money back. So out of sight, out of mind. That you definitely want to have a peace of mind fund to help you maintain your house and anything that may happen to your house. But they do have again communication with your realtor. Ask them, do they know some home warranty that they work with, or do they suggest to you to have? So you definitely want to um, communicate that with your agent. I I usually get my buyers a home warranty. I sometimes negotiate that into the deal, or sometimes I will pay for it out of my pocket for my client, because I know how important that is to have when you owning a home, because those things make a difference. I have had a client who just bought her house and tragic happened to that house. And one tragic happened, then come the summertime, HVAC goes out. If she didn't have that home warranty, that wouldn't have that would have been some money coming out of her pocket. But me making sure she was covered, that was it was very little that had to come out of her pocket to get that done. So remember, home warranty is definitely a key essential for your house, and definitely read those warranties. And if you, I know it's a lot of jargon and everything that's in those things. But if your agent is working with a home warranty company, they should know what is going to be covered and what's not going to be covered and things in that nature. So definitely ask those questions to your agent. Um, is again, communication is always key. You have to communicate this. So we go for for your um for your house, because when spring hit, summer's gonna be right there. Again, if you signed up for this class, you will have seen that these handouts is part of for this class. So you have to definitely change and clean air filters in your central air system. That is a must. You're gonna be wondering why you sneezing and what's going on and things like that. It's because your air filter needs to be changed. It is that's a must. That should be changed. It depends on what kind of filter you have. They got 30-day filters. They got 60-day, 90-day filters. They have filters to help you out. Definitely change that. But that definitely a summer seasonal thing that you need to do. Um, so that do that for the first day of summer if you don't change it out regular. That most people, I'm not gonna say most, they have some people who get 30 days, so they know to do that once a month. So that definitely needs to be checked out in the summertime. If you have a septic tank, have that inspected during the summertime. Because okay, we won't say it, I'm gonna be real, all that waste that you have did for the holidays, check that septic tank. If that's what you have, a septic tank, definitely check that septic tank, because you don't want it to back up into your house. Get it inspected. Inspect your driveways, sidewalk, patios, bricks, and other concrete surface for cracks. Repair as needed. So you definitely want to make sure that those things are, again, this part of the maintenance of the house. You definitely need to invest in and make sure the house is. Sometimes you may not, say you have a crack in your the sidewalk because they had a tree right there. You already got rid of the tree, and if that not really, you know, I would say use your judgment. If you need to ask someone who more inclined in this kind of stuff, definitely, um, definitely, they'll let you know best. I'm not saying go hire somebody to say, do I need? No, you don't need to cover every crack. That's not what I'm saying. It's just to make sure your maintenance, and if it's getting really outrageous and you got dips and everything, you may look into someone helping you with some cracks on the sidewalk and on your patio. Definitely on your patio, you don't want to be outside grilling and you fall into a hole. So inspect your decks, your steps, and wooden structures for damage. Again, anything that's outside, you definitely want to keep check on, because the elements has got to it. I don't care if it's winter,